Well, good morning, good afternoon, good evening, wherever you are. Glad you could join us today for Breakout Trading Answered, the show where we talk about all things breakout trading. And of course, joining us today is Mr. Breakout himself, Tomas Nesnidal. Welcome, Thomas.
That was funny. Thank you very much, Andrew. Welcome, guys. We're back. We're back with Breakout Trading Answered. We're going to talk about breakout trading stuff as usually, and we're going to talk about another very, very helpful things that we believe will make your breakout trading better than before.
Exactly. And we're going to be extending our How to Make Breakout Trading Work series into softs, which is really exciting. I was just checking the slides and you've got a lot of good stuff to share with us today, Thomas. So let's go to the chat and say hello, see who's here with us today. Hey guys, what do you think about Thomas's new nickname I just gave him, Mr. Breakout? Mr. Breakout Trading. Hey Eric, Giorgio. Good evening, Giorgio. Hey Thomas, how you doing? Olga, always good to see Olga. Hey Egyptian trader, welcome. All right,
Hey guys,
so it looks like
good to
we've
see you
got
again.
a good group here. Yeah.
Yeah, I'm pretty sure there are more of our great audience out there watching us right now. Maybe we will hear later from them. So good to be back with you guys.
Yep, and Chris says, Mr. Breakout, it is.
MBT, oh my God. What did you do? What have you done, Andrew? What have you done? MBT.
I love it. That's great. It's going to stick now, Thomas. You're now Mr. Breakout Trading. Mr.
Good one.
Breakout.
Good one.
When is the Marvel movie coming, Rob says.
Rob. Okay. All of a sudden, everybody is wake up.
Good. I need a bit of a wake up today as well. So it's good to have a laugh. All right. So as I mentioned, we're going to be extending our How to Make Breakout Trading Work series. And so far, what have we covered, Thomas? We've done indexes, metals,
energies, before
energies.
Metals.
Yeah. I'm forgetting the order. We
Grains.
did grains last show, right? So
yeah.
What is this, the fifth one? I think it's the fifth one.
It's the fifth one, yeah.
Yeah. And so
it's going to be pretty soft. It's going to be pretty soft.
Or sweet. We'll see.
Yeah. Yeah.
So I guess you can go, Thomas. Go on. I'm doing a lot of talking today.
I was about to say, I have to be quite honest, Andrew, tonight, because softs are not my favorite. yet, and that's the irony. They're super, super, super good to have them in portfolio, which I will talk about anyway. But softs, it's like if you ask me about my favorite markets, softs are not among them.
It's understandable, and I think that probably, if you ask a lot of futures traders, they probably can't even list all the markets that are included in the softs group. So I don't think they're very popular. Obviously not as exciting or as talked about as indexes and energies and perhaps metals. But as you mentioned, they've got a place in the portfolio and they can be really helpful in diversifying. So I'm looking forward to seeing what you've got to share with us today.
Yes. Yeah. I think, it's quite interesting because some markets we all feel very excited about very quickly, like, indexes, energies, even metals, grains. Like I love grains. A lot of traders, they don't care about grains. I love grains. But with softs, I think one of the reasons why I never got so, let's say, enthusiastic about softs is because I'm a lazy trader. Probably because softs are really, really hard to develop strategies on. Some of them are impossible at all or completely, and some of them are quite difficult. So one needs to be very patient when developing strategies on softs. But ironically, despite all the difficulties, they have enormous benefits and reasons to have them in portfolio. So we definitely, should not discount them just because we're being lazy or because these markets might be unpopular compared to others. But what I would suggest, I think with this episode of making the breakout strategies work, we're getting a little bit more into the advanced area. So we covered all the previous market categories, which are quite all right, and nobody should struggle, but we have just 3 categories left, which is softs, bonds, and currencies. And you will probably confirm from your experience as well that these 3 market categories are really tough. So we're definitely entering some real challenge, guys. So just for your information.
Yeah. So why don't we get started then, and with which markets are actually in the softs markets?
So if you please, let's do that. So if you could share the, thank you, Andrew. So let's start, guy, with what is it even softs like? What we do consider what is part of these soft markets. So we have 1, 2, 3, 4, 5, 6 tradable futures markets. Well, not necessarily tradable, but 6 commonly known soft markets on futures exchanges, which is coffee. I mean, who doesn't like coffee, right? Cocoa. And Andrew, do you pronounce it cocoa or cocoa? I never know in English.
I say cocoa, but I think it's got different pronunciations depending where in the world you live. So
okay,
cocoa is good for me, but cacao, maybe.
Cacao. Yeah. We have cotton, we have sugar, orange juice, and lumber. And guys, just quite frankly, we've been pretty successful, I would say, with our breakout trading strategies among most of tradable, reasonable markets. I would say among vast majority of markets, futures markets traded in the US. But with softs, as I said, it's more of a challenge. And we pretty much were able to create strategies on just 3 of them. So I would say the coffee is probably the easiest from the entire category. And I would say it's not even as difficult as like the rest of this market category. So coffee, Casey, is totally doable. It's not easy, don't get me wrong, but it's doable. It's same like with, let's say, metals. You can do it. You can even create swing strategies on coffee, and that's the only soft market where you potentially can create day trading strategy as well. Otherwise, we were not able to create day trading strategy on any other of these soft markets. We never ever managed to create a good cacao strategy. Yeah. We were definitely able to create strategies on cotton. That's also doable, swing strategies. We were able on sugar. However, we do have pretty mixed results with sugar. And I'll talk about this a little bit later. I don't think that orange juice is tradable. I think it's a tiny, weird market. And lumber, I think it's totally untradable market. It's so thin and so weird that I wouldn't even bother focusing on this market. So I would say you definitely should keep in mind coffee, because coffee is a good one. And I think there is a point in trying to work on cotton. Otherwise, I'm not fancy about the rest. But 2 is still better than 0. So that would be probably my primary focus. So I know that this doesn't sound. We definitely haven't started this episode the way we usually start other episodes, like with a lot of fanfares, like, guys, go for this. These are great markets. As I said, this is a little bit more complicated. Softs are getting really, really hard, and we don't have many choices. However, there are still really, really strong reasons why we should not ignore them, and we should be super serious, like professionally serious, about stock markets. And if we can move to the next slide, please. I'm going to talk about them. So why soft markets? Why, despite our difficulties and challenges, we should include them? So let's have a look. at the next slide, which it's one picture thousand, one picture worth thousand words. And if you have a look on correlations, and again, this is from MRCI. We use this correlation 180-day daily correlations. We use this similar one in the past, but if we have a look, these markets have really powerful correlations related to especially indices. So for example, coffee, 9% correlations is phenomenal. I mean, like, we're close to zero. It cannot get so good with many other markets. With stocks, you can really have correlations close to zero. Sugar is just 1%, and cotton is just -5%. So we're really getting some very serious positive correlations. I don't mean positive like a positive number, but with a positive impact, because these markets can be good stabilizers for your portfolio. If you want to stabilize your portfolio, we already talked about linearity in previous episodes, and you can definitely experience linearity when you trade just indexes, energies, or alternatively metals, especially gold. And we do sometimes experience linearity among these markets, because these are more interrelated, like indexes plus crude oil plus gold. There are obvious connections. Whereas with coffee, cocoa, sugar, cotton, the interlinkage between them and the world economy is really weak, and that's one of the major reasons why you should have them in the portfolio, because you barely will ever experience the linearity effect among these markets. So I think that's a good reason to overcome laziness and work on these markets a little bit as well.
Yeah. In the previous slide, Thomas, you said that orange juice and lumber are not tradable, and they're a bit weird. What do you mean by that? What is it about those markets that make them untradable for algorithmic traders who like to have a defined?
Question.
Weird is a bit of a conceptual kind of idea, but what exactly about those markets make them untradable?
Well, don't get me wrong. I think, for example, sugar is tradable on daily chart, but you already know, everybody who keeps watching this show, you already know that we're mostly focused on higher X-minute time frames. That's where we get most success with algorithmic breakout trading. So for dailies, I think sugar is all right. But the thing is that, for example, so first of all, lumber is a tiny market, and it always used to be a very tiny market, and the liquidity is really low, and you can have a lot of intraday gaps. Like you can get a price executed on, let's say, price. Now I'll make an arbitrary number, 100, and the next one, instead of being executed on 100.1, can be executed on 100.9 or 101 or even 102. So it's a tiny market with a lot of intraday gaps, and the overall, there's no really the real push and follow through that we need for serious breakout trading. It just gets a little bit weird. Just like if you look at these intraday charts and compare them to other reasonably tradable markets, you're like, what the hell is going on? There's not really going much on. And it's a little bit similar with sugar. It's a little bit better with sugar. However, sugar, you still have there's something about the character of these intraday bars. It's something heavily misaligned with the idea of breakout trading. So the technical quality of these trades and charts and the way they're executed, there's something that doesn't really corresponds well with breakout trading. It can with different style, or on dailies, on daily charts, that can be a different story as well. But overall, I found these two markets really challenging for creating good breakout strategies.
Yeah, we've got a comment from John here in the chat. Let me put this up on the screen. I've been trying for a while to find strategies for sugar, and I've had zero luck so far. Just recently started looking at coffee, still a work in progress.
Yeah, great, John. Yeah, coffee. You should be all right with coffee. That's definitely. But I do have similar experience with sugar. It really it does. It's a tough, weird market. I think in past I used to trade options, and I think that specifically these markets are more tradable with options, where you can mitigate a lot of this in intraday weirdness, but not for algo trading.
Yeah, I've had a very similar experience with sugar. It's a difficult market, very difficult.
Yeah. So do we have some more questions, or shall we move on?
No, that's it. That's it for now. Martin wants to know if we're feeling a bit soft today.
Yes. No coffee
Okay,
yet.
so
We've
no
been
coffee.
just talking about coffee, but haven't had any.
I've got my coffee here. Yeah.
Lucky you. So let's get
right.
back to slides. And so when I talk about soft markets being really difficult, softs being hard. That's a beautiful phrase. Softs being hard. It doesn't mean that you couldn't be successful. It just means that you really need to have a lot of patience. Overall, we managed to find 137 breakout strategies among softs, which is not our best category, but it's still quite doable. So if you have a closer look, sorry, I need to lean forward a little bit. Most successful, we're on cotton, where we have 63 strategies. Then we have
sugar 54.
Yeah, sugar 54,
And coffee is 20.
Coffee 20. Yeah. So that gives you some idea. Although is that sugar? D54?
54 sugar, yep.
Yeah. Okay. Where's cocoa? Wait, something's missing here. Where's cocoa? Oh, did I forget cocoa?
Yeah, I don't see it on the list there. Must have forgotten it.
That's weird. I must have forgotten. Because with this, we do have some strategies on sugar, but they don't perform well in out of sample, so they should not have been there. Instead, we should have cocoa. Never mind, guys. You know that we did make something on sugar, but these guys forget sugar, because these are theoretical strategies. They don't perform well out of sample. We completely discarded them. I don't know. I apologize. Something, maybe it's an older chart. I don't know why my hedge fund teams maybe they confused and should have been cocoa. I'm not really sure. But anyway, as I said, tradable, cotton, KC, a couple of strategies. You can get strategies with a little bit of patience, tradable, and then the cocoa. So patience, but doable. And I'll show you some examples. Now, the question is which time frames and time templates you should use. And I think this is another kind of a specific about this whole category, and another reason why I'm not so keen on these markets. So the reason is that a lot of markets are tradable pretty well overnight. And we talk about indexes and energies and metals, and it's getting better and better, and we're getting more and more movements and volume overnight. Softs are really, I would say, stuck in their overall conservative regular trading hours window. And if you have a look on this table, you can see what are the RTH, which are regular trading hours, exchange time. And on the right side is what we found the time templates that work best for us. So you can stay with both. Like we still can create strategies with these regular trading hours, but weirdly enough, and there's a lot of weirdness regarding softs, as I already said. These small adjustments just got us better results. So we're using these very similar to regular trading hours with some small shifts. You see it's between 10 to 30 minute shifts, but these small adjustments somehow work better for us. Overall, as I said, these markets are really lagging compared to the rest of future markets, which are more and more tradable overnight. So you need to be also ready that there will be, with these markets, you will have more of an experience of overnight gaps, and just expanding trading session like you can do with energies or gold will not fix it. It's the night overnight liquidity and quality compared to other markets is still not there. So again, a little bit weird to trade with some, caveats, but also with the correlation benefits, which still make it worth considering these markets. Yeah, and now now these are the time frames that we basically, I think all our strategies are exclusively among these markets. Coffee, sugar. Where's the cocoa? But this same applies for cocoa as well. So we only have pretty much results mostly among 80 minutes. Okay, so 80 minutes is I would say for soft, it's a universal time frame. So whenever you start with softs, you should, with any market, any soft market, you should get good results with 80 minutes. That's a universal, that's the default settings, and the vast majority of our strategies is 80 minutes. We got a couple of strategies with lower, especially on KC and SB with 30 minutes, and with cotton also 120 minutes, a little bit higher, but the vast majority is 80 minutes, which again, I think is a little bit weird because it's a little bit weird time frame in my perspective, but that's the whole category. Like this whole soft complex it's very specific. You need to approach it very specifically with these weird nuances, weird time frames, weird time templates, and then you can make it work, which is all right. Like every market has got its quality and its character, but overall, start with 80 minutes. You should be fine with any soft market.
So what do you think 80 minutes is a universal time frame for softs? I mean, that's quite an interesting observation you've made. Do you have any reason why, or any idea why it might be?
That's a brilliant question. Yeah, my only answer is go figure. I was so surprised as you are. Like, it just, I would say I somehow had to accept that this whole category, as I said, is weird. It really is a weird category. Like if you look at these OJ or SB, you see these weird intraday movements that you barely see in any other market. You see this huge, behind the rest of the industry with overnight. I don't know, there's something so specific about soft markets that we almost have to stop wondering why it's so specific, why we have to use these weird tweaks in time templates and these weird time frames. And I don't have any rational answer. It just, this is pretty much a category where I had to accept, I had to go with the flow, I had to go with where we can get some results and not question it much, and be pretty grateful that we at least get some results, because this really is a tough category. So I wish I knew why 80 minutes. So weird, isn't it?
It is strange, but I think you see it in other markets as well, where particular lengths of bars work better than others. Maybe there's underlying cycles or something that help to play out in trading strategies. But it's interesting, the 80 minutes, I've never seen that before. So
exactly, yeah. So
yeah, it's very, very interesting. So we've got a question here from Mark. Let me put this one up on the screen. Would adding seasonality filters help, or perhaps commitment of traders?
Yeah, I think it could help. I think we have it on our to-do list in Hedge Fund to have a closer look on commitment of traders. I think commitment of traders could be pretty interesting way, as well as seasonality. But as I said, I'm a little bit already suspicious that there will be another weird twist, another weirdness, because definitely anything that applies to all the other market categories does usually have some small twist or some subtle difference or change with soft. So I would say it's a great idea to think about cycles and commitment of traders. But I would also say, knowing how particular these markets are, we have to be very open-minded and not to stubbornly be fixed on some well-known techniques. Like, really open mind, experiment and see what sticks, because what sticks with softs can be something completely different compared to what sticks with any other market. But overall, I agree, like seasonality commitment of trader should bring some benefit.
Yeah. Okay, we've got a question here from Egyptian, which we're going to save for later. It's about portfolios. So we'll save that for after we've done with the softs. So we'll come back to that, Egyptian. All right, so that was the only comment or question in the chat for now. So let's see some examples. What have you got here?
Yeah, that's a good idea. All right, so the first one is from Cotton. Let's have a look. Actually, when I was going through these few strategies on softs that we have in our hedge fund database, I was pretty surprised. It takes a lot of patience and time to develop them. But especially these on coffee and cotton, they seem to be doing really, really well. So, and we trade them live, of course, as well. We do have them in our hedge fund. So cotton, it's a pretty good it's a pretty good market. You can see that the real out of sample, which is everything on the right side beyond the vertical chart, very stable, like no deviation. Then you can see that this particular strategy, it's 10 years of data, $40,000, 3,000 drawdown, so very high net profit drawdown ratio. You can also see that there's a bias on a long side, which you will see mostly with cotton. These strategies, these markets will be hardly balanced. What I have to say, it can get quite challenging with both cotton and coffee. Can be slippage, especially with coffee. It can get a little bit crazier. When we initially started trading these soft markets in our hedge fund, we get a pretty good data at the beginning, and we thought that the execution costs are within whatever we use for other markets, which is usually one tick on entry and one tick on exit. But then we got into times of high volatility, especially if I remember with coffee. And coffee, once coffee gets to its low liquidity, high volatility, the slippage can get 3-4 ticks. So with these stocks, we need to be aware that we will, in times of low liquidity, high volatility, we can really get way bigger slippage than normally. But overall, you can see that just cotton, quite reasonable strategy. Again, you definitely 80 minutes, you definitely can get strategies like this. You just need to be really, really patient.
Yeah. Okay. Next one.
Yeah. Next one. Okay. So this is coffee. Yeah. So coffee. I'm just switching here on my other screen. So again, coffee. Just like very well in out of sample. Same benefit like with cotton. Once you develop a good strategy, and it passes all the robustness testing criteria, and of course we developed all these strategies with our framework, which most of you know from our masterclass, Breakout Strategies masterclass already. So once you develop them, they seem to be doing fairly well in out of sample. So again, same story. Like, you need to be patient. You need to be aware it will take some time, but then after all, you can have a pretty good result. Now, what is more obvious with coffee, that this is a way bigger market compared to cotton. So here during 10 years, the net profit would be 120K, so about 12,000 per year, with maximum drawdown 8,500. So that's again phenomenal Did we lose Andrew?
No, I'm here. I'm just
here he
switching
is.
off my
Yeah.
camera so we can see the drawdown figure.
Yeah. Oh, thank you. So again, very good net profit drawdown ratio, and you can also see a big average trade, which is 225, which is a very good average trade, although it's a swing strategy. So overall, again, once you develop a strategy on coffee, usually it's a good strategy. Like there's no question that these markets can be rewarding. You can get good strategies. They seem to stick pretty well with out of sample, and in a sense, they're, despite all their weirdness, they seem to be pretty reliable. But again, a lot of patience when you're developing them, way more compared to any other markets. The other thing I wanted to point out again is with coffee, you need to be aware of these slippages. So 225, fortunately, you can really get a good average trade. Like you can get 150, 200, 250 on swing trades quite often. So coffee it's a market which, yes, it can have very high slippage, but it can also afford to have higher slippage because it's a bigger market, and you can absorb higher slippages into the average trade. But I would say whenever you're developing a coffee strategy, I would say, like, conservatively think about 2.5 slippage on entry and 2.5 on exit. So that's 5 ticks round turn. And sometimes you will have just 1 tick in, 1 tick out, but you will also have sometimes even 4 or 5 ticks occasionally. So on average, I would say 2.5 in, 2.5 out. So be aware of that you will definitely need higher average trade to absorb these transactional costs. The other thing, which is quite interesting with coffee, so you saw that with the cotton, there's an obvious long bias. With coffee, there seems to be short bias, and not just with this strategy, but we see this with more strategies. And sometimes when traders just start out with softs, sometimes I'm totally okay. I even support that idea that with coffee, they can start just one side strategy only. They can start just short trading strategy, because this, for some reason, this seems to be quite short biased market. So if you want to make your job easier, you can start with short strategies only on coffee, and that should be a good starting point for you, where you should be able to develop something. We focus on like 90% of our strategies overall. We try to focus on both sides, so it's doable with both sides as well, no question. But you will hardly see balance. Again, this is specific for softs. Like with softs, you will hardly see any balance. These markets are with those for sure.
Yeah, I think in the cotton strategy, actually, it was the long bias.
Yeah.
I'm just going to go back a
Yes.
slide, and the short was only like 25 average trade, I think 26.
Yeah.
So the short side really is not. I don't know if this includes transaction costs.
Yeah, there is
not.
there is transactional cost, but just a minor one. It's one tick on entry and 1 tick on exit. So in reality, it will be a little bit more. And yes, the short side seems to be almost untradable. But the interesting thing is that it does help with the overall stability. So I wouldn't necessarily exclude the short side, because it helps with the stability of the equity curve. Sometimes that's the only effect that these low frequency sides, like either short or long, have. But yeah, it's interesting. Like cotton heavily long, KC heavily short. Weirdos. Welcome to the world of weird softs.
All right, we've got a couple of questions in the chat, but maybe we'll get through the next couple of examples first, and then we'll come back to them. Yeah, because I think we've got a few more to show or to share.
Yeah. I have one more. It's a last example, and it's on sugar. And so sugar, as we all know, it's hard. It's a weird market, and I do not recommend it. And I just wanted to share with you. So despite all our effort, and we put a lot of time, we were able to develop a few strategies on sugar. But if you look on the out of sample, which goes kind of sideways, like that's what the rest of our strategies looks like. So sugar, I would say none of our sugar strategies really proved itself in out of sample data. Mostly it's sideways. Some of them are losing, not much, but losing. But this market is super weird and doesn't seem to work with breakout strategies at all. Although you can create some strategies with a lot of hard work and effort, I would totally completely skip this market. We do not trade them. It is what it is. It looks like this. I mean, even from these examples, if you're a little bit experienced and you've created a lot of strategies on different markets, just from looking on these equities and on these numbers, as an experienced trader, you do get the feeling that this is something a little bit different. Just like, it's very specific. It's not bad or good or great, because it's great because you have these correlation advantages, but also you have these very, very particular specific characteristics about these markets that you need to be aware of. So with softs, don't get surprised about anything. Like anything is possible with softs. Literally, these markets are always full of surprises.
Yeah, we've got a question on clarification here from ASF. So the results in these tables, Thomas, what trade size are they based on?
One contract. It's all
One
based
contract,
on one
right?
contract only. Yeah, one unit, one contract, one futures contract.
Yeah. Thanks for clarifying that. Is that the last example?
Yes, that's the last example.
Right. Okay.
Yeah.
So maybe we'll go to some of the questions in the chat.
Yeah.
Okay. So John made an observation, which I think we've already covered. It's interesting that the coffee strategy is almost all short trades. Any reason why?
I have no idea. I agree, John. Great observation. That's exactly what it is. But with this, I'm not able to answer any logical reason for these soft markets, because these soft markets are so particular, so incredibly particular, that I gave up trying to find out answers. I just gave up. It's everything about soft is particular. And I mean, I said that there are three categories of really difficult markets, like softs, bonds, and currencies. And if you look at bonds and currencies, these are hard markets, difficult markets, but still they behave pretty normally compared to others. Like they still respond to what other markets respond to. These markets are still, there's still some normality about them. Although they're super difficult, there's still something quite normal about them. With softs, everything is weird. Everything. Really, everything.
Okay. All right. Thanks, Thomas. So there's a question here from Arik on slippage, which you kind of touched on as we went through, but maybe it's good to review that all in one spot now. So let me put this on the screen. What slippage would you suggest to use for stress testing the tradable markets, coffee, cocoa, cotton, and sugar?
So sugar, I would totally exclude. Don't even bother with sugar. With coffee, as I said, 5 ticks round turn. With cocoa and cotton, at least 3 to 4 ticks round turn. At least 3 to 4 ticks round turn. And coffee, definitely 5 ticks round turn.
Yeah. So if you found that the behavior of the softs markets are weird, is a word you've used quite a lot, how much emphasis do you put on the stress testing results then? Are you expecting that they're going to be strange as well?
It's quite interesting. I would say that's a good question, because I would say in the overall robustness testing procedures, there are not any obvious deviations. Like we stress test and robustness test these strategies on these markets the same way that we do any other market. So we do not deviate anyhow from the framework, and everything is the same. And we do see quite similar numbers and results. So there's not any deviation. I would say the weirdness is in these time templates and time frames, and then this behavior once you see these biases, long short and sugar going to nowhere. But overall, the core robustness testing, stress testing, it's pretty much the same. I would say that it can get a little bit challenging. Stress testing can get a little bit challenging because you don't have so many options. So, for example, with indices, it's very easy because once you develop something on E-mini Dow Jones, it's easy to stress test them on all other indices, and there's high correlations. These strategies, you need to, let's say, be more or maybe less restrictive. So, if you have strategy that you develop on, let's say, coffee, and it shows at least something fairly reasonable on coffee or sugar or both, that's already great. But you definitely need to, because of the number of tradable markets, you need to lower your expectation with stress testing, and you need to be okay with, usually if you have just one or two other soft markets where you can get reasonable results, that's already great. So you definitely need to lower your expectations here. That's a good point. That's true. Yeah.
Yeah, and like the examples you showed in those slides there, similar kinds of results that I've seen as well, where coffee is, seems to be easier on the short side and cotton on the long side. So, yes, building a coffee strategy that may take advantage of a short bias, and then testing it on cotton, which may have a long bias. There's probably going to be some kind of mismatch there, which not necessarily indicates that the coffee strategy is bad, but you've got to keep in mind that these markets can have very different behaviors, right?
Absolutely. Yeah, you're 100% right. And again, as I said at the very beginning, these are already more advanced markets. So I think, to have a fair quality judgment on stress testing on softs, you really need to have some experience already. You should have gone through these easier markets, have some cognitive quality developed for assessment of these cross-market stress testing, and then you will need to take on a quite advanced judgment with these, and also lower your expectations. Overall, the procedure is still the same, as I said. There's no any deviation, but of course, you have to be okay with just one or two cross-test market, and put it into the perspective with these biases and everything you said. So yeah, I agree. Definitely advanced stuff. Definitely, you need some experience already.
So just a clarification from Mark on stress testing: which markets into the softs would you use, and which ones wouldn't you use?
From what I remember from Hedge, we always just have these three markets: cocoa, coffee, and cotton, and we just whatever market we develop on, we stress test on these other two, just these three markets. We do not even touch lumber, we do not touch OJ, and we do, was that it? There was one more, right? Lumber we don't touch ever.
Sugar?
Sugar we don't touch. OJ we don't touch. Yeah. So only only coffee, cotton, cocoa, these three.
Right. Okay. And another stress testing question from Mark: how about stress testing using an earlier 10-year period?
Not a big fan of that. Like 10 years ago, the market behavior was completely different. I probably I would rather stress this on different market. That probably gives me a little bit more confidence. I don't know. Like we would have to probably research this idea more and see what would happen. So I don't have any strict or strong opinion on this one, but still it's better to stress this on these different markets. That's always a better choice.
Yeah. Thanks for the stress testing questions, Mark. Good questions. So we have 2 questions from Egyptian. How about we do this one from Arik first, because it's more specific to softs, and then we'll get to Egyptian. So are there any courses such as DPS, SFB, or DPT that from your experience tend to work well with the softs?
Quite frankly, we have not tested DPT on softs yet because these are softs are one of the lightest that we ever experiment on with anything. DPS and SFB should be all right. The strategies that we do trade on cotton and on coffee, we have just vanilla plain. We have not implemented none of these additional techniques. We just trade them the core basic versions.
Yeah, I've done some testing with DPT on the softs, and I do remember that we had good results on cotton, but I don't remember. I'm pretty sure we tested on coffee, and I don't remember the results. So that may mean nothing, or it may mean something. I don't know.
Yeah,
I can have a look,
good to
Eric.
know.
And but cotton, I
That's good
do
to
remember
know.
we had some really nice results with cotton on DPT.
That's great to know. Yeah, we definitely should test this as well, but because these are so much out of our interest, it just we really have them on the edge of our portfolio. So quite frankly, we haven't put so much effort into softs with these additional techniques.
Yep. And for anyone who's wondering what DPT is, it stands for dynamic profit taking, which is a technique Tomas has shared to how do we summarize it? I guess it's a trade management technique that you can exit based on specific market clues or conditions. So if you want to know more, you can email us support@bettertraderacademy.com and we can give you some more details about that one. Thanks for the question, Eric. All right, let's go to Egyptian. Let me just scroll up to the first question. It was on portfolios. My voice is getting a bit scratchy. Here we go. Would it be better to have a larger micro portfolio with higher correlation or smaller, lower correlated mini portfolio? And the second part, can this be done with around 25K?
So the answer is that the best is to have a larger micro portfolio with low correlations. That's where you should aim. What you should aim for. So none of them is what you should do. You definitely should aim for larger micro portfolio with low correlations, as low as possible. I would not go for larger micro portfolio with high correlations, nor for small, lower correlated E-mini. None of that. So micro, as many markets and as low correlation as possible. And with micros, yes, definitely it can be done around 25K. It can be also the E-mini. You're right, like you're totally right that you can get small, lower correlated E-mini portfolio with 25K, and that already can be a good start as well. So you're not wrong, like Egyptian trader. You there is some merit into what you're suggesting, but it's still with this micro, it's such a huge advantage that we can now system size and make more strategies among more markets and low correlations. That's where I would put my focus on.
So just to clarify, I understand your recommendation is to go with a smaller, with a micro portfolio with for 25K and have low correlations. Is that right?
Correlation,
did I understand?
Yes. Yeah, low correlations and bigger portfolio, as many strategies as possible.
Yep.
Low correlated among as many markets as possible.
Okay. Yeah, Egyptian said it's hard to get low correlation with fewer markets.
Yeah, correct.
Yeah.
Exactly.
Yeah.
Exactly.
And he's got another question here on a British pound strategy. This sounds like this could be a contender for our strategy review, but I'll ask it here now. The best British pound strategy I found is net profit 37k, average trade $50, and drawdown 5.5. Is this good or bad average for this market?
Yeah, that's British pound. It does produce sometimes results like this. This average trade 50, is it after or before transactional costs?
It says out of sample including costs.
Including costs. That's reasonable. Yeah, if it includes costs, that's reasonable. Definitely reasonable. So good work, good job, because currencies are really difficult. So if you found BP, British pound with these parameters, that sounds really reasonable. You can send it. You can send it to support@bettertradereconomy.com, and we can review it next episode. Actually, I'm thinking that the next episode probably will be on currencies, so that would be quite relevant as well.
Yeah, that'd be great. Why don't you send us an email, support@bettertraderacademy.com, and Kate will let you know what info we need, and let's do a review of this strategy or anything else that you've got in the next show. That'd be great.
Yeah, it's a good idea.
Excellent. Thanks, Egyptian. I'm looking forward to seeing that one because, as you mentioned, Thomas, British pound is a tricky one. Now, I'm just scrolling up through the chat, make sure I haven't missed any questions. So if you've got a question before we finish wrapping up here, post them in the chat. And we've got a couple minutes left. And okay, Thomas, so do you want to have any... Oh, I almost forgot the quote of the show, the quote of the episode.
That's the best part. I've been really saving this quote. This is my favorite quote ever. And you'll see why. I'm just like, this quote so much talks to me. You have to share it, Andrew.
And me. Here we go. I feel like you chose this one for me today. Here we go.
We're talking about softs and coffees, guys. So sorry, I couldn't help. Like, I'm a coffee lover, and I think whenever I can choose between inspirational quote and coffee, I'll always go for the coffee. Yeah.
Yeah, I like that
we
one.
need some fun as well. Yeah, we need to have some fun as well.
Yep, exactly.
Yeah.
All right, so I don't see any more questions in the chat, so I think we've got them covered for today. Did you want to have any closing thoughts or comments about softs or trading in general, Thomas? Before we finish up
I just want to say, you already know my opinion about softs. Like, I call them weirdos, but doesn't mean it's necessarily a negative thing, right? Like, we need to be in trading, we need to be objective, and we need to be rather neutral, because the only question is, does it serve the purpose to help us create better diversified portfolio? And if it does, we need to go for it, and we need to put some effort and time into that. So don't get my comments on softs like as something negative. Like, I like weirdos, I like weird people as well, so weirdo is a good thing for me. So it's very particular, and I have a lot of particular friends, by the way, so no judgment here. But yeah, you need to be super patient, that's for sure. You need to know that you're dealing with something very particular, but it still definitely has got a place in professional trading and portfolio. But you do not need to rush with the softs. Like, you can definitely leave them for later, and there are better markets to start with for sure.
Yeah, absolutely. All right, so if you've enjoyed everything that Thomas has shared today, or even just got one little nugget of information, if you thought it was helpful for you, then please give us a thumbs up. I can see we've only had 12 thumbs up, which is pretty low today. So please give us some support. Show us your thumbs.
Please.
I'm watching right now to see if it ticks up, and it's It's slowly going, so please, show your support. Give us a thumbs up and tell all your trading buddies about this. And if you have any questions for the show, obviously you can turn up live and ask them in the chat, or you can send us an email at support@bettertraderacademy.com, and we'll save them up, and we might. My screen is saying connection issues, so I don't know if we just dropped out there, but we can cover your questions in a future episode.
And don't forget, you can send us your strategies as well for evaluation. You do not need to send the code. Of course, we understand that's proprietary, but we can assess your strategy, your compound auto sample equity. Have a look. We can even assess your portfolio. So whatever you want us to assess, talk about, give you feedback on, just send it to us anytime. We're here.
Yep. Thank you very much, Thomas. I'm having some serious connection issues here, so I don't even know if people can hear me. But Thomas,
we can
is frozen,
hear you,
so
but
you can.
We said it all. Yeah, we said it all.
Okay.
We can wrap it up.
I missed a lot of it, and your screen is frozen. So let's wrap this one up. Hopefully, we can close the show in a nice way. So thanks everyone for joining us today. Thank you, Mr. Breakout. Thanks for sharing everything today. That's your nickname now, Mr. Breakout. That's who you are. So thanks again, everyone, and all the best. Cheers.
See you. Thank you. Happy trading.